Hey guys, it's Jonathan here. Welcome back. It's July the 7th now, Monday afternoon, and I just want to talk about a little bit about how the market performed in June that just passed. So, I mean, if you read my article, and you'll see that the numbers again are pretty much the same as they've been for the last year, meaning that every year that goes by, the market is better in terms of sales, in terms of prices. Sales go up, prices go up all the time, and this has happened for the last at least 7 years that I've been in the business. And you'll see that last year in June, the average price was 530,000. Today in June, it's 568,000. So an increase of 7.4%. And a lot of people ask me all the time, why does this happen? Why does this happen? When is it going to end? I mean, how do prices continue going up? The reason they continue going up is very simple, because there's more buyers out there than sellers. When there's more demand for something and little supply of that something, it's going to cost you more money to get that something, right? So the prices go up, and that's what's happening in the housing market. Much more buyers than sellers, and therefore the prices continue to go up. The reason there's much more buyers than sellers is because interest rates are so low. So it's a good time to get into the market, because although prices are high, the interest rate being low will allow you to make your monthly payment per month. Now, everybody asks, well, when are interest rates going to go up? Because when they go up, things are going to happen. People are going to start losing their houses. That's not going to happen. I mean, interest rates have to go up drastically, and more things have to happen in order for people to start losing their houses. But in terms of interest rates going up, let me answer that question. It's very difficult for the Bank of Canada to just say, you know what, we're going to increase interest rates because houses are too expensive. They can't. And they can't only not increase interest rates because it's going to affect a person who has the big mortgage or a lot of debt. It also affects the Canadian dollar, which is a huge thing. If interest rates go up, our Canadian dollar increases in value. The reason our Canadian dollar increases in value is because if rates go up, the money you have in the bank is going to earn more interest. So foreigners that hear about this, they invest in the Canadian dollar. They invest their money in our banks, and they make more interest. As they do that, it increases the value of the Canadian dollar. As the value of the Canadian dollar increases, this has a negative effect on exports. So for the United States, for example, we exported, I think, $300 billion worth of exports in 2013. The reason we did that, the reason the U.S. buys from us, is because our dollar is lower relative to theirs, and it makes sense for them. It takes them less to buy something that's worth more. They buy it for less money. If the dollar is at par or a little bit higher, they're not going to buy from us because it won't make sense for them. They're going to be spending too much. So they'd rather buy it from somewhere else where it's cheaper, or they're going to make it at home. So increasing in interest rates affects not only the person with a big mortgage, but it also affects the Canadian dollar, which affects exports. So this is a huge thing. So you can't just say, oh, they're going to increase interest rates. So are they going to increase interest rates in the future? They will. Not when they said they will. They won't do it in the end 2014 or 2015. And when they do it, it's going to be gradual, because it affects much more than just the person with the mortgage. So keep that in mind, okay, guys? Till next time, I hope this was an informative video, and I'll see you guys next time. Thanks. Bye.